This video is going to be titled Navigating the Stock Market During Economic Uncertainty. If we take a look at the S&P 500 here, it looks quite scary, right? From a high of 611 all the way down to this drop here of 481. That's a 21% drop from our all-time high for the S&P 500 SPY here. If we zoom out right to the weekly chart, you can see we've had dips like this in the past. You zoom out here to the monthly chart, this is quite normal, right? This isn't anywhere as bad as what has happened in the past here, in my personal opinion. Take a look at the historic chart here for S&P 500 and just view it, right? We know that there's big dips. We know that it always retests its all-time high. And so personally, if you are a long-term investor, I think just dollar cost averaging into the Mag 7 or into the S&P 500, you should be fine. You shouldn't be worried, right? Stop looking for profits within the first few months here. Stop looking for profits in 6 months, 7 months. Start thinking about 1, 2, 3, 4, 5 years out from now. Where do you see yourself, right? Are you going to continue dollar cost averaging into the stock market? I think people mistakenly view it in a short term when they're looking to be a long-term investor, right? If you're a long-term investor and you bought at 611, you shouldn't be worried at all unless you put your entire portfolio all at once, right? You should be spreading out your cash and dollar cost averaging into the stock market. That's just my personal opinion, right? I'm not going to force anyone to buy, sell, or hold. I'm just sharing. Typically, as a long-term investor, you want to spread out your cash so that you have the cash to be buying this dip opportunity, especially while we are below the 200-day moving average, which is where the S&P 500 is at currently, right? You can see the moves here are extremely volatile. We've even had a single day where we moved up 5%. We've had up and down 3, 4, 5% for the S&P 500. That's to say, though, while we are below the 200-day moving average, I think this is a good time to be buying into the stock market. If you take a look at any of the Mag 7, much of them are below the 200-day moving average, all right? Now, I think the two best stocks, personally, I would be looking at is NVIDIA and Tesla, right? Tesla is going to be a high-risk mover. NVIDIA here definitely oversold, right? Comparing its price to forward earnings. I think NVIDIA here is going to be the top pick. And so, personally, if it was me, I would look to be adding NVIDIA a considerable amount into my portfolio. That's just my personal opinion. Long term, I do believe the S&P 500 is going to have its retest to the all-time high. We already know this. I don't even have to explain it. If you zoom out to the weekly chart and monthly chart, you know there's big dips in the market. There's times of, recession. There's times of bear markets as well. And eventually, we always retest its all-time high. So what am I doing? Personally, take advantage of these dips. I believe during these dips is one of the best times to be adding into the stock market, especially the Mag 7. If you believe in tech's future, I really would say take a look at Mag 7. Look at these stocks and see which one you believe are going to be relevant to your future, right? And personally, in my opinion, Tesla and NVIDIA are going to be the most relevant in my future. If you believe else, then feel free to invest in the other stocks. But I believe all of Mag 7 are going to be doing extremely well. If you listen to what Tom Lee has said, he believes that tech and Mag 7, especially Mag 7, is extremely oversold right now, and people are going to come back into Mag 7, especially when the overall market rallies back up. And hey, I don't want to be buying when the stock market is rallying back up. I want to be buying while it's cheap and low, right? When there's a lot of fear in the market, it's one of the best times to be buying in the stock market. I don't want to be buying when there's a lot of greed, right? And so if we zoom out here for the S&P 500, there's definitely tons of fear here. I believe if you look at the fear index, it's quite low compared to what we're normally at, right? So now that we're far away from our all-time high, in my personal opinion, I think dollar cost averaging here is a pretty good, wise choice, all right? If you guys don't have a community yet, feel free to join our Discord. Let us know down below in the comments as well what you're buying in your long-term portfolio and how you're navigating through these bear market times, or this could even just be a short-term correction, right? But if you believe this is a bear market, let us know down below in the comments what you're doing during this time. Join our Discord, first link down below in the description if you want to join. We do have a dedicated chat section for each of the Mag 7 as well as the S&P 500 as well. Thanks for watching, and we'll see you in the next video.